This comes up. Hold on. This needs to come up. All right, go. Good morning. This is Lanci, and welcome to the Gold Fix. I am your host for the next 20 minutes or so. Yesterday well, let's put it this way. Today, we will be doing a straight recap of yesterday's activity, a walkthrough of what a real technical analyst does. I'm not a technical analyst. I don't pretend to be one, and I don't even play one on TV. In fact, I think it's voodoo magic, but there is a guy out there who really knows what he's talking about. We'll also look at yesterday's activity as well as where we are this morning. You should be seeing on your screen right now the Opportunistic Trader's website. And I put that up there for two reasons: as a hat tip to the people that I work with, and also to tie up yesterday's technologically challenged webinar on the Barrick deal. Now, on the Opportunistic Trader website, it is a subscribers only website for the good bits, or the great bits, we'll call it. Those pictures there, people, they're all very handsome, but I look better. Under Insights, you'll see where I put my mouse. That's open to the public, all right? So I'm going to show you, if you want to follow up on yesterday and get a better idea, click on Insights. All right, and then after you click on Insights, we're a little bit slower with this app on here. You're going to be brought to the article that I wrote yesterday, which was the companion piece for what we were talking about with regards to the Barrick Rand deal. So when that comes up, we'll figure out how to tighten this up in terms of speed, but you can look at a white page there and just draw things on it while you're thinking about it. It won't take long. Anyway, so the article, what we were talking about yesterday quickly was that in studying Barrick, the Barrick Rand deal, I came up with some coincidences that made me favorably inclined towards gold. So I'm just showing you how to get to that article, all right? So it's on the Insights. The site is much faster than this. This has to do with my shareware that I'm using. So here we go, and we'll put that up, and then we'll get right to today's markets. We won't spend long on this, but I want you to be able to find it and navigate towards it. Dead air is a bad thing. So while we're doing that, we're waiting for that, I think it's important to note what happened yesterday. Gold sold off aggressively early in the day, but did not react as much as the stock market did late in the day, especially after Powell talked. We'll come back to that. But these are the things that I think you should be coming to the site. I highly recommend you coming to this site for daily. The site has no pop-ups. You're not going to be spammed. First, at the top, you have the overnight report. That's something, if you're on the mailing list with no obligation, you're going to get that. This story underneath here, the Gold Fix. This is the story that ties in with what we talked about. Now, we're going to take only a minute to go through this. It may take 2 minutes to load because of my computer, but it'll only take a minute to go through this. But it says much more concisely what I was trying to get out online yesterday to you all. Thank you for being patient with that. So yes, while waiting for this to come up. So gold sold off yesterday early on dollar strength. It wasn't incredibly strong, the dollar, but gold nonetheless, really shit the bed, so to speak. I have noticed that gold will, and others have noticed, that gold will, of the last, say, week, gold will react mildly. Gold will strengthen mildly on a weaker dollar, and it will sell off almost precipitously on a stronger dollar. And the conclusion is that there is metal above the market that needs to be sold. So here we are. This is the article that you should come back to. It talks about in better detail the formulation of a trade idea and how to test yourself to see if it's something that you want to do. Basically, it's the thought process that goes in behind me saying, hey, mergers, gold recommendations by 4 bullion banks, commitment of trader reports. Okay, it's safe to be long gold. I'm not saying it's going up tomorrow, but there you have it. Okay, so this is our chat room, which is for members only, and I'm going to, there you go. For members only, you'll see people's trades in there. Larry, the predominant trader in the room and actually very successful. We have oil traders, et cetera, et cetera. In fact, these are my trades, 4 for 4, 9 for 9 year to date. Nothing to write home about, but I risk 1 to make 2. Larry is clearly doing very well this year and this month. And this is a guy who's a perpetual bear, in my opinion. And he's making money in the stock market, in a bull market, not to mention trading oil. But okay, let's move on to gold specifically. All right. Now, what we have to look at today is, I want to look at the gold market as it pertains to this analysis. Now, this is a technical analyst's work. His name is Michael Moore. I've mentioned him before. Now, this type of stuff is hard to read through, but I think it's going to be very helpful for day traders, okay? Day traders and swing traders should pay close attention to things that Michael says. Now, we're not going to go through every word here, but I think we want to start with where it says the decent trade in the first section, after the word basis in dark, the decent trade below, he uses the word decent a lot, below 1208.1 has brought in $13.50 of the $7 plus we were looking for below. Now, Michael has algorithms and systems he uses for probabilities. He also is very trend line oriented. If you like trend lines, then this is kind of the type of person you want to be working with. Now, let me get that article up there again. Okay, so what you have here is you have a guy who basically said that below 1208 you should be careful. All right, and sure enough, on an hourly basis, we did sell off. Below 1206 was worse, and now going into today, he's saying you can get long where it says upside, get long above 1204 and a half. We break back above here and then back below, look for pressure to come in. He's not saying that that's an ultimate bull or bear number. He's basically saying it's an inflection point. So why don't we go, I'm going to take his numbers and put them on our chart. You don't see them now, but you should see them now. Okay, there's a lot more going on here, but these 3 trend lines in a simplistic way describe what he was looking at yesterday. You're looking at an hourly chart. Now, on the 26th, we broke below a level that was important to him on this trend line. And to him, that implied a bearish move of anywhere from $7 to $14. And lo and behold, we did get that. He also says that if we go below, and we are below that now, if we go below 1198.20 in that area, you should be very concerned that we could drop down to 1189. That's this trend line here, I believe he's looking at. Now, the reason to get bullish for him would be any numbers that he's bearish on that we go back down and through, or if we break above a trend line that comes in this area here. And he has a number here And he also has a number at 1204.5, which I have not been able to decipher. So instead of belaboring this much more, let's go to the daily, all right? And I want to talk about that in terms of my own analysis, and that is volatility based. Gold is at extreme lows in volatility. Without getting too much into the details of the other factors that are behind the screen, the one that's in front of the screen that you should take note of is the Bollinger Bands are as tight as they can be. Now, people who trade the Bollinger Bands will frequently trade them when they're wide. They'll trade them when the market goes back into them. And that's a regression type of a trade. You'll see Larry do that a lot quite successfully. I don't know that he looks at the Bollinger Bands. I think he's just got a great intuition for that. On the other hand, you can use Bollinger Bands. One of the original ways they were intended is when the Bollinger Bands get to a certain tightness, the market will, and the market starts to move and they widen, the yellow lines widen in opposite directions. You go with the direction of the midline. What we're saying here is that we are a day or two away from the market having what I would call an expansion range or a violent move. And it may be happening today as we speak. Normally, these are momentum trades that I would put on with stops. But I'm just saying, it might not be a bad idea to be long volatility or if you're short to cover it. If you look at, say, the monthly, you'll see that we have some troubles. Why don't we just go right to silver and talk about that. I think if you're focused too much on gold, as I have been, you miss the other metals that are actually telling you the story. When the China trade wars, first of all, precious metals historically, especially gold, are closely tied to, you have to know your FX pairs. Precious metals historically have been tied closely to the dollar yen. But since the trade war started, they started to decouple from that and follow closely the dollar, yuan, or renminbi, depending on if you're looking at onshore or offshore Chinese currency. And that was a direct correlation with, the explanation would be very simple. If there are trade wars, then there's less demand for Chinese-made stuff, which means there'll be less demand for raw materials purchased by China. And lo and behold, we had, lifetime sell-offs in copper, in silver, and in the other precious metals. Gold was actually the least hit by it. What escaped me, what I missed, I saw it, but I didn't put much weight on it, is we've actually had a very strong bull run in commodities, sans gold, in the last week. Look at what silver did. Look at what palladium did. Look at what platinum did. Now, I'm staying with the metals here because I've said before that in a sustainable rally, frequently silver will lead gold. And my reason or my rationale for that is very simply this. Base metals lead precious metals if you're looking at inflationary worries. And China will buy base metals and then gold will eventually follow. The other time silver will lead is at the end of a rally. But right now, the leader you should be looking at if you're trading gold or silver is palladium. And, I wish that were my idea, but that comes from a guy with 30 years experience of managing money. And he's been using palladium and platinum as their early indicators for a while. But if you notice, palladium is up, silver is up, platinum is up, gold is down. Some people are going to say that's people putting on gold, white metal spreads. That may be true in part, but I think what we're looking at here is just a straight up commodity rally. When you add oil into that, you're looking at a market markets that are beginning to ignore the trade war. They're looking at China as not as weak as other people may. And this is a trader describing to you or rationalizing what he sees. Now, I'm flexible and I can change my mind on that. But the reality of it is silver is now leading in a rally. Now, to give you an idea of how far silver has come, from where it used to be. People who follow the silver gold ratio spread will notice that silver had a lot of buying in the 1530 area. And let's see if we can get that up here. In the 1530 area, which is in this area here, for about 2 weeks, you had a buyer of physical silver, and when that buying went away, the market just collapsed. So and there's that little rectangle there on the weekly. The market just collapsed thereafter. So what we are aware of now is that silver can go up to 1530 with gold doing very little. So please be aware of that. If you're trading gold, if you're bullish gold, the axiom today would be: if you're bullish gold, buy silver. Quickly to review yesterday before we go, the Fed raised rates another 25 basis points as predicted or as expected. They also did two things that I thought were, one was not that interesting, but should be mentioned, that the Fed intends to keep on raising rates more than the markets expect. The second is Powell admitted that they no longer agree or feel that they understand what neutral rates are. Now, just a little bit of a editorial rant. If you don't know what neutral rates are, then stop showing us the dot plot, because the dot plot is your core tool for neutrality. So if you don't know what neutral rates are, but you've been showing us dot plots for the last 6 months, 2 years, stop doing it. So the Fed doesn't really, I'm not saying they're not good at what they're doing, but the Fed can't explain what they're doing in normative terms. So neutrality is a subjective term, and they're just starting to admit that. What you can expect, I think, from this is that something that I've been saying to Larry and just patting myself on the back has been, in the stock market, it will keep rallying because it's daring the Fed to tighten. And, I chuckle about that because I thought that was a truism because the Fed really couldn't keep tightening. They had to relent, I think was a trade word, in their tightening bias because of the emerging market issue. Here's the thing. The flip side of that coin is the Fed is saying, hey, as long as you keep fucking rallying, we're going to keep tightening rates. And that's what's happening. I don't really think the Fed's that worried about a 2% drop off of all-time highs. And that's where we are. We're running out of time. I don't want to take up too much more time today, but we're working through some kinks, and I appreciate everyone staying on here. We're going to be adding a lot more. We have interviews coming up next week with some well-known traders and brokers and professionals in the industry. We're going to have some interaction. And of course, I will put a bigger hamster in my computer so things can load faster. In the meantime, please be aware that gold is below an important level, and something. We want to pull that out there. We want to close out with this because there's a trading opportunity out there today in gold, I think. And whether you're buying or selling, I'm not gonna opine on, but you've got movement today. You've got the market that is selling off below, I think, an important level, and it's probably a sell down to 1193, and below that it could go to 1189. That said, we're going to look for an hourly chart signal where you get a gold candle that has a long wick below that finishes green. And that'll be, for me, a reason to buy. If we don't get one of those, then I think we're going to be selling the market on a momentum basis now with a stop out of $3 higher. I don't know what we're going to do. I have to step out of this thought process and enter into a different thought process. But I want to just show you where we are. So let's look at the latest news. We have a second here. Okay, so obviously we have the problems going on with the government, which we really don't care too much about anymore. So anyway, let's wrap this up and just say gold is in a precarious situation on the daily chart that could lead to another $20 to $40 washout. On the monthly chart, gold is in danger of breaking down to a level where I don't know if it's going to continue lower or higher, but I do know that I don't want to be short volatility at these levels. On an hourly basis, below 11.98, consider being short. Above 11.89, consider being long. So you can trade that range. Above 12.04, you should not be short. Above 12.08, you should be long if we get there. On pullbacks to 12.08, do not buy them, would be my advice. But on pullbacks to 12.13, if we break above there, those seem to be safe to buy. In the meantime, because we'll be in the teens again, in the meantime, have a great day and stay with us for as Larry goes through in a much more eloquent way what the markets are going to be offering us today and trades that we are looking to do. Thank you very much. Have a great trading day and good luck. This is Vince Lanci for the Gold Fix, turning it over right in about 5 minutes to Larry Benedict, the godfather of the Opportunistic Trader, who will be showing us the way for the rest of the day. Thank you so much. Replays will be available later.